Hello, my name is Stacey Mankoff, and I'd like to welcome you to our latest version of the Bellringer, produced by the After the Bell events. As you know, which are temporarily on pause, but we are very much hoping to get back into them towards the end of this year. Fingers crossed. But I am delighted to welcome Pelli Wang as our thought leader today. And Pelli is currently managing partner of DeerCreek, which is a growth strategy consulting firm helping high potential companies in banking, financial services, insurance, and frontier technologies find their edge. Pelli previously led business development and partnerships for Consensus Capital, and prior to that, led venture investments and partnerships for Seed Invest. And we are delighted to have her. She has been a speaker for After the Bell events. So welcome, Pelli.
Thank you so much. I'm glad to be here.
Okay, now to get started,
hmm
this conversation we're calling digital transformation in finance.
hmm
Where, how, and why to invest. And of course, we want all these answers within 15 minutes. Uh, but to get started, what is the current state of digital finance?
Yeah, right now, digital finance is going through a big transformation. And I think there's a few factors influencing that. Number one, of course, is, kind of COVID last year really, changed how people have thought about or interacted with banking, right? So it was really the first time where people couldn't really go to a branch and do a lot of the traditional banking services that they you know could do in person before. So a lot of things that had to be done through web or through mobile, people found that the current infrastructure was really not adequate.
Mhm.
On top of that, you have sort of the other macro sort of stimulus, government stimulus. So there was a tremendous amount of M2 money supply increase over 20%. And so that, the creation of all of that new capital meant that from the investment side, a lot of investors were looking for yielding products, not really going after fixed income, but other types of investments to find yield. And so all of those things kind of was the perfect breeding ground for crypto. As you know, Bitcoin has been around since 2009, over 10 plus years,
Right.
and so that's really what we started to see a lot of movement in crypto, starting 2020.
Mhm. When you were talking about products, what type of products did you mean?
I mean, there's there's a lot of different types of products.
Mhm.
It depends on whether you're talking about the more enterprise products versus sort of the retail products. On the sort of retail products, what's been really popular over the last 6 months has been this concept of decentralized finance or open finance, where people are able to not only do sort of peer-to-peer transfers, but they're able to do lending and savings without sort of a centralized middleman, a bank, so to speak. So some of the more popular protocols like Compound, Aave, a lot of people have been using those products without, again, having to go to their bank, waiting for some sort of approval or underwriting process. And that's really seen a huge explosion over the last few months.
Okay. And in regards to the enterprise products?
Mhm. Enterprise products, I think a lot of people, again, are working on the more infrastructure layer part of banking. So, 3 weeks ago, there was the whole GameStop phenomenon. And, so part of the issue with what happened, I mean, there were many things that kind of went into that
Mhm.
crisis, but the clearing and settlement of securities takes time. It takes T plus 2, sometimes 3 days for securities to clear. And in today's sort of digital world, people have an expectation of, oh, I opened up my Robinhood account, I want to trade right away. And they don't understand that underneath like the operations and mechanically, there's a lot of sort of components to that for trades to clear. And so that's sort of what a lot of the big institutions, a lot of the big banks and the clearinghouses are working together on more sort of permission private networks to try to sort of speed that process up.
Mhm. And in regards to both of these, what aspects do you see as the big growth areas?
Well, I mean, the theme that we see in terms of any product that people get sort of excited about is sort of the yield story, right? So a lot of retail investors really are gravitating towards DeFi, decentralized finance products, because they see, in their traditional bank account, they're getting 0% yield or maybe 0.5% yield.
Okay.
Whereas, if they move over to sort of the crypto or blockchain world, some of these protocols have similar savings accounts where if you have capital, you can contribute to another potential borrower, and you get, on the low side, a few percentage points. On this high side, more risky products have 50, 100%
Mhm.
returns, APY. So that's what a lot of people are gravitating towards, and also the speed at which these sort of transactions can happen. They're much faster than waiting a few days, which is what the traditional sort of banking system typically takes.
But when you're investing in that and these growth areas,
Mhm.
is there more risk?
So on the investment side, I would say, there are two different types of investments that you can make within the blockchain and crypto world. So you can still make more equity type investments, similar to sort of like VC. And you go through a lot of the, kind of like traditional metrics that people care about, which is, the team composition, what is the market, what is, the product, is there a product market fit? And, you invest in the company, you get, shares back on for early stage startup investing. Then you have, sort of the crypto VC world has these token models, right, where you don't actually own equity in a startup, but you own the token, and that's, I think, a fairly new sort of investment model where
Mhm.
you really have to understand the mechanism of what that token is used for, right?
What is it?
So
Yes. Could you elaborate a little bit on that? What does that mean that you own a token? I mean, it's like I live in a co-op rather than a condo. So I don't own my apartment, but I own shares in the corporate.
correct. Yeah.
Is it,
So
you know,
yeah. So with a lot of these sort of uh, blockchain networks, you own a token, which is a representative um, of being able to use the network. So you don't necessarily own the equity. You don't own, sort of the piece of the company, but you own the token that is typically used to do something within the project. So for an example, Ethereum, it's the second largest cryptocurrency by market cap.
Mhm.
There's many elements to that, right? So you own the token, and the token is used as gas to send transactions from one person to another. So if you don't have that token, you're not able to send that transaction. You need it to basically pay, to say, okay, I have a wallet and I need to, pay someone to, for a goods or services, or I need to send it to someone. And so you have to pay a little bit of gas fee, and that's in the fee is in that token, which is Ether.
Okay. Okay. So when obviously you advise a number of companies.
Hmm.
When you're looking at these companies to advise, what sort of criteria do you look for? Because I'm sure you're approached by many companies and there are a lot of different startups. But what are things that you particularly look for in
Hmm.
companies to that you feel that yes, this company has it to take it, through the long haul?
Yeah, for sure. I think a
Without
lot.
obviously giving away your secret.
I think a lot of it is still, very similar to traditional early stage venture investing, which
Uh-huh.
goes back to, the team composition. In the crypto and blockchain and digital finance world, I think, having a good mix of the technical skills, because you have to really build product. And a lot of these products are very technical. They're very automated. There's not a lot of the operations happens, through different smart contracts. And so you need a really good sort of strong technical team
Mhm,
to build those types of products. And then you also have to have, kind of like the business sense. So people that really understand the industry. So for instance, one of the more recent projects that we've worked on was in the supply chain finance space. It's a huge market, maybe 2-3 trillion dollars in cross-border trade. And for people to kind of go into that industry not knowing, how the different players work, how finance, trade finance works, that sort of industry knowledge is really necessary. So that goes into sort of understanding the team,
mhm,
understanding why they want to build this product and what edge they have compared to, someone else that thought
mhm,
this was cool, but just, had no technical background or industry background.
mhm,
And so I think that's really the foundation, looking at the team, the market, and then also, is this something that they're building? Is it a good replacement for what already exists? And a
mhm,
lot of times people spend a lot of effort recreating something that already works pretty efficiently.
mhm.
So, in if it already works and you don't have a marginal sort of improvement, then there's really not an impetus for someone to switch, right? Um, so that those are kind of the main sort of guidelines or criteria that I go through when looking or speaking to a new project.
Mhm. You mentioned the supply chain industry. What
Hmm.
other industry do you think is a real area for the opportunity right now? I mean, obviously, there's a lot in the payment, regular payments, but what
Yeah.
other industries?
Payments is huge, and there's a lot of different companies working to sort of improve that. One of the sectors that's quite popular and quite hot right now is in the non-fungible token space. So what this means basically
I was just
is
going to ask you, define that, please.
right. So
Uh-huh.
non-fungible token is basically a token that represents an asset that is a unique asset. So if, let's say, you have an art piece, that's a really good example. So like a Van Gogh, that is a physical object, and they will basically make a token that represents that piece of art in a digital form.
Okay.
And whoever owns that non-fungible token basically has ownership of that item. And it doesn't, there are different elements of NFTs. It doesn't always have to reflect a real world asset, but it's a unique asset that exists in
Mhm,
the digital world.
mhm.
And so what people have been using it for, especially within gaming, is, special characters. So Cryptokitties a few years ago became very popular, and
Mhm.
you basically can create a digital cat and you can breed it with other cats, and they have special attributes,
Uh-huh,
and they have, a unique kitty.
uh-huh,
And you can take that kitty and then you can, kind of breed it with other cats, to create other, unique kitties.
uh-huh.
And so that's been a very popular sort of
All using tokens to do this.
all using tokens. Another example is the NBA Top Shots. That's been a pretty popular application of NFTs as well. So they basically, it's a collaboration between Dapper Labs, which is the creator of CryptoKitties, and the NBA, and they take unique basketball moments, right? So
Mhm.
LeBron James dunking, during a championship, and they make that moment a non-fungible token, and whoever owns that has the rights to, that um, 5 second 6 second clip, and they can
Okay.
sell it to someone, or they can own it and say that they um, you know have sort of they own that moment. So kind of like a collectible card.
Mhm. I've seen things like that where I've seen where it's been for people
Mhm.
owning one thing, like somebody did a piece of music and had bless you, and
Yeah.
had multiple tokens for that one
Mhm.
particular so you don't own it in entirety, but you own a portion. So the
Yeah,
token.
absolutely.
So then
Um,
so then what happens when that song is played or whatever and some royalties come in, then it's sort of split between everybody who owns that piece of music?
um, Yeah, that's a different, music
Or
and copyright and
yeah,
all of that. That's a different application, and there are people that are working because it's a big problem within royalties because there's a lot of payment elements. A lot of people get paid. But the previous example that you were sort of talking about with the art
yeah.
auction,
Mhm.
um, there is definitely sort of different applications where a very famous piece of art could be split up to many owners, and there are different startups that are working on that, so basically democratizing the ownership of um, unique assets,
So
so
that
that
so sorry, so that would be interesting. So if Christie Sotheby is auctioning a piece of art, you could actually have somebody, well, or the representative, whatever, buy it as and tokenize it.
that's right. And actually, Christie's is working on a an actual digital art auction. I believe it either closed recently or they're in the process of auctioning it off right now. But it's a fully digital art piece collectible that they are auctioning off. So it's been in the works for I think over 2 years. So yeah, it's really exciting to see that
Yeah,
come
well,
to life.
that's a whole other industry.
Mhm.
And what about in like healthcare or any other industry? What other industries do you see this digital transformation growing in?
Yeah, I unfortunately don't spend as much time in healthcare because that's a huge industry. There's a
Right.
lot going
Yeah, I
on.
was just going to. As soon as I said it, I thought, no, the insurance stuff.
Yeah,
But invest, yeah.
I spend much more time in financial service and banking. One area that I think is quite interesting is in the digital identity space. So basically tying you as a person with a digital identity that you can go to different different mobile apps or banking apps, and proving that you are who you are, and it's a big, I think we're starting to see it right now with a lot of the big tech companies. When you sign up to a new
Hmm.
app, mobile app, you can log in directly with Google, or you can
Right.
directly log in with Facebook or Apple,
Or facial recognition and all of
or
that.
facial recognition. And a lot of people want to create sort of a decentralized identity protocol where it's not tied to a big tech firm. It's something that you hold in your wallet, and that you can prove when you, again, go to a new sort of online Web3 application. You can say, hey, I am Pelli, and this is all of my information, and you can get access. So,
That sounds terrific.
yeah.
Now to wind up this talk, obviously we've talked where do you see this going in the next few years? Do you see it where, are we in the infancy stage? Are we in the toddler stage? And is this going to become the norm in the next 4 or 5 years?
Absolutely. We're still very, very early. I have a lot of friends that ask me for investment advice and
Yes,
what to do, what to buy.
right, right.
And I think, even though I've spent many years in the space and there's so much to learn and the industry is evolving very quickly, I think the greater world and the number of people that actually own cryptocurrencies or digital assets is still a very small percentage, as a percentage of the whole world's
Mhm.
population. So I definitely think in the next 5 years, having digital money is going to be more of a norm, and that's going to either come from a central bank digital currency, a government saying, hey, we're going to allow you to have wallets, and we will distribute money directly to that wallet,
Mhm.
whether that's in China or in another country. That will definitely be, we'll see some sort of iteration of that in the next 5 years. I think real-time payments is also going to be a really big thing. I've done, luckily some calls with the Federal Reserve, and that's a top priority for them. They know that people want faster payments. That doesn't necessarily take 2 to 3 days, but could happen, 24/7. So they are working on FedNow, which is a real-time payment um, system by the Federal Reserve. So that is expected to go live in 2023, 2024.
Mhm.
Um, so I think those two things will, cause more of the population, the general public, to be more comfortable with digital money,
Mhm.
and having sort of a wallet where they feel comfortable sort of transacting. And we see it especially with e-commerce being more popular. People know that they have to have some sort of, digital representation of their bank account.
Mhm. Well, Pelli, thank you so much. This has been terrific. And thank you for your time and your insight. And I really look forward to seeing you in real life and having you on another panel discussion soon.
Yeah,
Take
definitely. Thank you
care.
so much.
You're welcome. Be well.
Be well. Bye bye.